Welcome everyone to the April edition of Price Know-How Snippets. Today it's just Mike and myself. Our colleagues are enjoying some opportunity to take some time off over Easter, but the format will be the same as normal. Mike's going to chat to you first around exchange rates and oil prices, and then I'll talk to you a little bit about what we think that could mean in terms of polymers. Over to you, Mike.
Thanks, Catherine. Well, starting with crude oil, February March were pretty quiet actually. So February, the average price for crude oil in terms of dollars per barrel was 83.48. The minimum was 79.94 and the maximum 86.61. At the end of March, the average was 79.14. The max was 86.18 and the minimum 72.84. Translated that to pounds per tonne, that was £520.65 in February, £490.97 in March. But right at the end of March came a shock, and that shock was the announcement from OPEC to cut production by 1 million barrels per day. And that actually meant that oil prices leapt up over the weekend from 84.93 a barrel to 89.89, which was a difference of $4.96 per barrel. Putting that in pounds per tonne, it went from £488.84 to £516.41, £57 increase. So I think there's a couple of things that could happen on the back of that. Certainly it's going to push polymer producers to resist price decreases, and we'll talk about monomers in just a moment. And also we've seen in the past that oil price can stimulate polymer demand as well. So although the markets look quite weak at the moment, we have in the past seen oil price stimulus driving up pricing. The last time we saw that was back in 2016, if I remember quite correctly. Contrasting oil prices and recent developments with exchange rates, it really could not be much quieter. So February against the euro, the pound was 113, and it was 113 on average in March. Against the dollar in February, it was 121, and in March, 121. So no real movement there. Moving on to feedstock. So C2 and C3 both fell by €40 a tonne. So C2 fell from 12.90 to 12.50, and C3 fell from 11.85 to 11.45. Benzene prices took a nominal drop of €1 per tonne from 9.19 to 9.18. I think styrene monomer was quite interesting as well. So styrene monomer actually went up from 14.37 to 14.56. And that's partly based on a global shortage, that €19 a tonne increase. And also here in Europe, we're seeing some production issues, and also the French industrial action is impacting both onto styrene monomer and styrene polymer pricing. So just put those in pound terms. So ethylene dropped by £35.30 per tonne, as did propylene. Styrene monomer went up by £16.77, and benzene dropped by 88p. So I'm going to move now back to Catherine, who's going to talk about the potential impacts of all of that on polymer pricing. Catherine, over to you.
Thanks, Mike. Well, we're expecting really mixed situations actually in terms of the different polymer materials, largely based on their individual supply and demands. As you also mentioned, Mike, the announcement on the oil price has perhaps changed our thinking a little, in that last week we thought that producers would be passing on at least the decrease in C2 and C3, with perhaps more softening on LDPE, where demand seems quite weak and availability seems strong. HDPE is a little bit more balanced to tight, so there we thought that perhaps prices might hold up a little bit better. C3, less €40. We thought that actually some producers would be forced to drop prices further than that because polypropylene demand is quite weak, and although there are some specific shortages affecting some producers as a result of the strike action also in France, to be honest. But overall, polypropylene is in quite surplus supply, really. So we thought there we'd perhaps see further reductions. This week, though, we're sensing some reluctance on the side of producers to pass on these decreases across the board, perhaps because of this oil price announcement where they've already been concerned about margins, and this increase in oil price could well mean that they're facing increased costs as we go through this month and indeed into next. So we see quite a situation of resistance where weak demand is going to put pressure on prices, but producers are going to fight strongly to try to protect their margin and to hang on to their profitability as best they can. Whether they succeed in doing that is likely to depend on the availability of material in the marketplace. So we could see some sort of standoff, but our expectation is where there is excess supply, then we will see further prices falling. So that's it from Mike and I today. We hope you found this helpful. If you do indeed need more information from us or anyone in your customer service team, then please get in contact. There'll be further information and perhaps a bit more clarity on the picture in our full edition of Price Know-How, which we put out around the middle of the month. Thanks very much.